Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, November 8th, 5:12 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the back-to-back follow-through days last week on November 1st and 2nd. Check the trend gauge over here. We've got the green arrow on market leadership. Plenty of leaders acting well, gapping up on earnings and holding the gaps instead of reversing, which we've seen in the prior couple of months in the weak market, but certainly a change in tone there. Short term, all five of the major indexes are above their 21-day exponential moving average. So we've got the green arrow there. Intermediate term 50-day moving average and long term 200-day moving average, both the yellow arrow meaning neutral. We've got the large cap indexes above their 50 and 200-day moving average, and the small and mid below their 50 and 200-day moving averages. So what happened today? A milestone post follow through day last Wednesday, November 1st. The NASDAQ 100. This was on FOMC day, closed with a flurry and logged a follow through day. And we've now gone 5 sessions since then with no distribution. There's Investors Business Daily, the analysts have done some research, and if there's no distribution 5 days after a follow through day, it greatly increases the odds that the rally will continue higher. So good stuff there. Tomorrow, we'll hope for no distribution again. That was a secondary follow-through day on the NASDAQ 100, this being November 2nd, and also follow-through day on the S&P 500 that day. So that'll mark a 5th day since those follow-through days, and we'll hope for no distribution there. It looked like there was a possibility of some uh, by late morning, mid-afternoon, early afternoon as we were selling off, but nice afternoon close. The only red flag seems to be small caps, which are pulling back to their key support level around 170 and the 21-day moving average. We'll take a look at that when we get to the charts. Here are the final numbers on the day. Mixed bag, but all in all, normal digestive action after a strong up move. Big 7 continue to lead, up 0.47%. RG8, tough day, down 0.48%. S&P 500 gapped up 0.15. Sold off hard, was down almost a 0.5% at once, rallied in the afternoon to a positive close, 0.10%. The equal weighted S&P 500 RSP slightly down 0.16%. NASDAQ 100 up 0.06%. Equal weight NASDAQ down 0.5%, taking a break from really good numbers yesterday. Dow down 0.12, mid caps down a little less than 0.5%. Russell 2000 down 1.1, led to the downside by oils, continued sell off in oils, and banks weak today also. Global 60/40 stock and bond up 0.14%. Bonds led the way as foreign developed nation stocks continued to lag. U.S. stocks, in-house GROTECTION up 0.08%. We'll take a look at our portfolio changes. One sell and a couple of adds to some positions that continue to work. We'll see that when we get to the tail of the tape and review a few charts of interest. Let's get right into it. Here's the S&P 500. You can see just trickling higher, actually 1, 2, 3, 4, 5, 6, 7, 8 up days now since this Morningstar pattern, Morningstar-esque pattern, we'll call it. It wasn't perfect, but the bottom put in on 10/27. Up day Monday 10/30, 10/31, and then 11/1 with the Fed. Then the big gap up the next day after the Fed took us above the 200-day moving average, above the 21-day moving average. Another gap up on the 3rd. That was Friday. And 3 days of tight up, tight higher high, higher low movement. That's the definition of an uptrend after all. Higher highs and higher lows. Again, stymied at that 43.85-ish level. Let's take a look at a 15-minute chart here. 43.85. We hit it 4 times yesterday. We got above it twice today and pulled back. So key level to keep an eye on, really 43.85 through 4400. Serving as a big resistance area. You can see the gap down over here on September 21st on this 60-minute chart, broke below 4,400, rallied up to that 43.85-ish area on October 10th, again on October 12th, again on October 16th, and the failed breakout above that level on October 17th led to the third leg down in this correction, which we've completely retraced now since the shakeout on the 27th. So forming a big cup. This is kind of the handle in the cup. I know it's steeper than we normally would like it to, but we don't get to pick the patterns. We get to look at them, interpret them, look for strength and weakness, resistance and support, and draw our own conclusions based on what we've historically seen in similar action. NASDAQ 100, 1, 2, 3, 4, 5, 6, 7, 8, 9 days up. First one, as it closed in the bottom of the range, but a lot of blue bars here coming into 374-ish resistance. That'll be the next area that we need to conquer. We failed there on October 12th. Challenged it yesterday and today, 374-ish. Can't quite get through it. The still, very clear uptrend with higher highs and higher lows. Let's flip over to the Dow Jones Industrial Average, which has reclaimed and is holding this 34,000 level on any pullback. Now to the weakest sectors. They had the biggest bounce higher during the big move up on 11.2 and 11.3, ran into the declining 50-day moving average. 3-day pullback now. This pullback is coming into the 21-day moving average. It's also the 8 EMA. It just really needs to hold here. Same situation on IWM small caps. Big move up, 3 days down, now sitting right on the intersection of the 21-day and the 8-day moving average, and right below this key 170 level, which has served as a support and then resistance level. Well, not really resistance yet. We got back above it. We need to retest it to see if it holds that support after getting back above it on that second gap up day last Friday. So as the major indexes, let's go to the VIX. VIX continues to come off in a bullish fashion. Bullish, helping the bears below the 15 level. Again, this is where stocks have done their best work, below 15 this year. Let's go to the dollar. UUP, the ETF for the dollar, pinching between the uptrending 50-day and the downtrending 21-day. Something's going to have to give one way or another there. Didn't get any not good action from gold as it broke below the 21-day moving average. This basically makes gold a failed breakout above this double bottom base. Hasn't obviously hit the pivot -7, but this has a much lower beta relative to the S&P. So it's back into the base and it's spending, and it broke below the 21-day today. We cut our gold position from a 4% to a 2% position, and just not seeing the action. I mean, for a while, this was an alternative to stocks while the market was weak, but now that stocks have reasserted themselves, looks like investors might be rethinking going into GLD as the market has been acting well. Let's look at gold stocks. GDX down 3% today, really taking the hammer to them, breaking below the 21-day and the 50-day moving average. These never broke out, never got above the 200-day moving average. And silver SLV down 0.4%. Failing to get back above the 50 and 21-day moving average. Just not a good look there. Let's go to BND, the broad bond index. New closing recovery highs off the bottom, 3-week highs anyway, off the bottom, and really going back to late September. I should say we've rallied 3 weeks off the bottom. New highs versus last time we saw these levels in prices was late September, so up 0.31%. And if BND is up, that means we're going to see Yields come down. Here's TLT, also up 1.7%, getting above that declining 50-day moving average for the first time. You can see this 90 level here. This is where we broke down, and that's where yields broke out. Let's go and take a look at those yields breaking out. This is when we broke above that 4.5 level on the 30-year, coming back down into it now after a failed breakout above the 5% level and breaking below the 50-day moving average on the yields. TNX, the 10-year, pretty clear now failure at the 5 level, visiting 4.5 today, which is, there was a big 10-year bond auction today. Went off fairly well, and 4.5% was the yield on it today. $40 billion in 10-year auction was received okay. Stock spiked a little bit on that, and that was one of the catalysts for the afternoon rally. Let's go to Bitcoin now, looking at like it wanted to break out yesterday. Not quite. A little bit of a gap down today, revisiting the pivot, but closed right at the 18 level. And after hours, let's see, a little bit of a move up after hours, as apparently the SEC has engaged with Grayscale about converting GBTC from to a spot Bitcoin ETF from an ETN. Right now, it's traded on the over the counter, and has a big premium, has had either a big premium or the discount, but looking to convert that to a uh, spot Bitcoin ETF that will stay in line with the price of Bitcoin as it trades. This is what we own, the Bitcoin futures. We've got 3% of this and 2% GLD after our gold trim today. All right, let's go to the tail of the tape. You can pause this. Some decent news here. Tomorrow we get updated sentiment numbers. I'm expecting them to spike dramatically after the rally that we've seen over the last week. Still operating under the bull case, clearly, with the follow through day and being above the 21 EMA. Oil broke below $80 a barrel, both on WTI and can't remember the name of the other contract, but they're both under $80. Didn't see that with Mideast problem. Let's take a look at what the Mideast problems. Let's take a look at USO, and in fact, OPEC keeping their production cuts in line. So I mean, you look at here, you can't even tell really. I believe this was the day 10/9 when we had the initial gap up on after Hamas's sneak attack on Israel. Made higher highs in a couple of weeks after that, and have really come off from 82 to 70, sitting on the 200-day moving average as USO. Back to the tail of the tape. No real standouts among the different sectors today, either positive or negative. As again, we continue to consolidate. We raised our beta from 1.25 to 1.37. Two adds to Lilly. They got approval for their diabetes drug, which has been being used as a weight loss drug, to officially be used as a weight loss drug. That spiked the stock. Celsius had a strong second day after earnings, third day after earnings, but pulled back a bit in the afternoon. We added to both of those. As I mentioned, we trimmed our GLD position. Bottom line on the day 5 after the follow through day with no distribution on the NASDAQ 100. That's another check mark in the column for the bulls. We want to get through tomorrow without any distribution to mark day 5 after the S&P 500 follow through day. The only fly in the ointment being the lagging small caps. We need to see them bounce off of this 170 level. Let's hit some charts now. We'll go through what we added to today. We'll start off with Lilly. A little bit of a pullback right into the close on this, but made a higher high, well, higher closing high since its earnings report. Here's its earnings report, 1-day shakeout, 3 up days since then, 150% above average volume. Volume really came in after that news came out of the approval of their really diabetes drug, but now officially labeled for weight loss. So that opens up apparently a bunch of markets for them. So we added to this twice. Let's take a look at Celsius. We also added to this twice. Uh, Tough stock, Celsius, wide ATR, 6% size on this now. This was up as much as 8% intraday, pulled back. We're using the 21 day moving average since it's hooked up now as a reference. That's also below the low of yesterday's wide bar earnings report. And GLD, we already showed that. Let's take a look at some other stocks that we have. These are half-size positions or more. Deckers continues to act well, a little bit of a pullback. Near the highs, CCJ was weak early today, a little bit of strength into the close, but still closed below the 8 EMA and bounced at the 40 level. That's the level we want to see it hold. CrowdStrike, no adds to this. We've got a 6% size on this. Lilly and Netflix are two full-size 8% positions, and then we've got the equivalent of 50% long in the S&P 500. The rest scattered over 3 ETFs: ARK-K, which pulled back today, BITO, and GLD. Here's Crowd, new high closes since the follow-through day. Can't complain about that. And let's see what else we want to take a look at here. Let's take a look at ARK-K. It held that 40 level that I referenced yesterday on the pullback. Want to see it blow above yesterday and today's highs and get through that 200-day moving average, but really just resting after 2 days up and outperforming the small cap indexes. That's certainly a positive sign there. So let's do a little bit of follow-up on some earnings stocks today. We'll start with Akamai. This initially had a positive reaction to earnings, reversed lower, and then reversed higher, up 1.56% on the day. That's a breakout, and volume 134% above average. So good stuff there. Let's see what else we want to take a look at. Axon reported earnings and initially gapped up, faded all the way back to near flat, and then strength came in. Nothing's ever easy in the market. Look at the 5-minute chart on this. Big gap up and major fade and then major strength. This kind of mirrors what the indexes did intraday today. Live Nation, LYV, following up with some strength after its earnings report. And then 3 big stocks to be potential leaders. Uber consolidating on its second day after earnings. DraftKings still consolidating near the highs 3 days after its earnings report. Yesterday, Datadog was the big winner. Today, it pulled back near that 100 level. Palantir, a winner on earnings, pulling back a little bit more right to the top of their recent consolidation highs above the earnings day. And one we want to keep a look at tomorrow is APP, double bottom base. It's up 16% after hours. Those are new highs relative to, they will be gapping out of this double bottom base. So good numbers on it. We'll see how it acts tomorrow. And with that, we're going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Always remember, it's not how much you make in the markets, it's how much of that you can keep. We're in growth mode now of our GROTECTION strategy. We protected the downside when we broke below the 200-day moving average, but now we went back above it and also back above the 200, and also a follow-through day and follow-on strength to that. So we're in growth mode right now, adding to the strongest stocks in the strongest sectors. And with that, I'll wrap up the video for Wednesday, November 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.